Good afternoon, everyone. Welcome back to the Ever4 Mindset Podcast. I'm your host and its founder, Michael Rebelo. I'm a 20-year-old entrepreneur who chose entrepreneurship over the traditional college path, inspired and driven by my goal to retire my mother and help other Main Street middle Americans just like her learn about and invest in other asset classes like multifamily real estate to build long-lasting financial freedom. As of this past February, she has been able to step down from her corporate W-2 job and become a full-time entrepreneur with me in Everforward Capital Partners. But here's the thing. We started out because we weren't financially literate. We did not know what all these big terms meant, like, central banking, interest rates, a balanced portfolio. We didn't know any of that. We figured, we'll just take it. We'll just take the blow when it hits us. But now we're starting to figure out there's actually ways that we can understand this. And the best person to describe this and, to kind of walk us through this, Robert Checchia. It is a pleasure to have you on the show, my friend. We've been talking a little bit online through Gmail, and I'm like, I have to have this guy on the show. And not only that, he likes Buckley. So there you go. That's even better. But anyways, Robert, it's so good to have you on the show, my friend. How are you?
Michael, it's an honor, a privilege, and a pleasure to be here. These points that you just described, that really resonates with my personal mission and goal in life. We all have you'll have to get our bills paid and everything. But what you said about having a personal goal and objective, that really resonates with me. So kudos. I love hearing that kind of story.
Absolutely. That's exactly what this show is for. But I won't steal your thunder because you're the guest, not me. So, Robert, I know quite a bit about your career and your background and what you're doing today with your company and your partnerships, but how did you get into this investment world anyway, investment banking and finance? What sparked that? And basically, what's your story? What's the timeline to what brought you to where you are today?
Okay. Buckle up there. I'm going to go way back, okay, tell the whole story for context. So I'm a first generation born American. My grandparents were immigrants, and then my parents as well. I was born in New York. I lived there until I was 11. My father was an entrepreneur. We moved to Brazil when I was 11. I lived there for 20 years. I watched him, build the company, sell it, rebuild it, sell it again, become an executive, and that always resonated with me. That you could, use different tools, right, in the business, in the management space, to solve problems. I always loved solving problems. I'm an introvert at heart, so for me, it was always, my nature, my default is going into quantitative analysis, big on math, big on science, that kind of thing. And, that's how I always knew I wanted to do something with numbers. I graduated in business administration. I went back to school to get a dual degree in physics. I love science. And then I wanted to do something with numbers. So I started my career at a private equity backed company in South America, in Brazil. It's a construction company, so that's where I was introduced to this industry. I spent 4 years there, and I spent 4 more years at another a large corporation. I spent the following 10 years after that in consulting, investment banking, asset management, and then as of the last about 6 years, I've been back in the operator seat. So currently, I'm the chief financial officer at Benzinga. Benzinga is the financial media and publication. We cover breaking news on U.S. markets. Okay, so. A lot to go into detail there, but my first approach, you ask me, how did I get into finance? It was, I wanted something that I could have an impact on. I wanted something that was numerical, and that's how I started. But that was just the inception, and I learned very quickly, Michael, that everything that I had as my assets, my skill sets, got me so far. The being very rational, very numbers oriented, and I really quickly I reached the roof, a glass ceiling. And I hope I can, I'm trying to pass it along here. So if somebody hears this, hopefully I can cut their development time, the professional development time, in a few years, because it took me a long time to learn this. Is the analysis part only gets you thus far. Okay. More than that, you will need, and much more important, are your soft skills. Okay. Effective communication, knowing how to address your audience, knowing how to convey a message. I had a boss once tell me that rationality doesn't convince, the storytelling convinces. Okay, so everything, that my whole world, which was numbers and analysis and rationality, became only one tool in a broader toolkit, right? And I had to start over from scratch, very humble, bite the bullet, and okay, what do I have to develop? Okay, I have to develop talking skills. I have to develop storytelling. I have to develop networking. Okay, so all of those were things that I had to develop. Another big one. It's part art and part science. Okay, so you have to know how much to use that tool of the rationality and how much to use the other skills that you're developing. Okay, and I was lucky enough to have good leaders and good managers and good people around me that I could emulate, right? But I took this approach honestly as I would with science or with math. I said, okay, how do I become a better speaker? How do I make more friends? How do I get better at networking? Okay, so that was a first step, I want to say, in my career. And after, I think I got that, went from 0 to 1 in that sense, then it unlocked the next step in my corporate development.
Wow. That is an incredible career, but there's something there that you mentioned that sticks with me is you have to work on your soft skills 100%. Because in my industry, when it comes to apartment investing, you have a lot of these numerical and, big time numbers people that love to look at these spreadsheets and do these projections and these calculations. But I tell them, how much have you networked? How much have you connected with potential investors or potential clients? Well, I haven't. Well, why? Because I don't know how to communicate. I don't know how to story tell. I'm like, I can sell projections all day long, but it's the story that actually makes the sale. And that is exactly what you said, which is wicked important. And you were able to acknowledge that and go, okay, I have this skill set, but I have the hammer in this massive toolbox, and I have this massive toolbox and it's empty. So I got to start building the tools, either building the tools or finding them and refining them. So I love that you brought that up because that's so important. And I kind of want to dive into that a little bit, when it comes to leadership, right? Because like you said, communication storytelling is so important. There's only so many times you could bring up the same return metric or same projection over and over again. So when it comes to whether you're not even a CFO or starting out a company or even just, a partner, how important is it to have leadership no matter what side of the industry you're on? Like, how important is that to have those skills?
I think it's absolutely essential. Okay, being an entrepreneur and I came into Benzinga. That's my bread and butter. I go into companies. It's one skill set to go from 0 to 1. It's a completely different skill set to go from 1 to 10, 1 to 100, and that's where usually I come in. And it's different, right? Some people have both skills. Some people have only one or only the other. Um, Being a leader is essential in any step, okay, of the process, because it's the only effective way that you can multiply your efforts. Okay, and I'm a big believer that culture is set from the top down. Okay, so you want somebody to follow or to act in a certain way, behave in that certain way. Let them see that. Okay, and they will be your eyes and ears and hands in that manner when you're not looking, when you're not paying attention. Okay, so I think it's absolutely essential. Any entrepreneur that I've worked with, that I've seen, each one has their own style, but they all have a style. You know what I mean? So they all have that charisma, that active effort of getting people lined up and rowing in a certain direction. Okay, now I think it's essential in any step, but you will have to go. You have to learn and build that muscle more as you grow, just in the size and scope of your organization. Because one thing is, you will not be able to look and to see and to work on everything as your company grows, right? So you will have to delegate more. And one thing that I want to mention here is learning how to incentivize, how to retain, train talent, and keep people incentivized and motivated. It's not only money, okay? It's recognition, it's empowerment, it's a space to make decisions. So I think that leadership is crucial, essential, any step of the way. Incentivizing, keeping people motivated is essential and primordial. But you have to know and identify which is going to be the carrot and which is going to be the stick in each situation. Another big point is you have to allow, at least in my view of culture, you have to allow people to fail. So if you
Oh,
let
yes.
them, you let them run and then you reprimand them with a mistake, with a genuine mistake, but they had goodwill behind it, then what you're going to do is you're going to punish the entire company, because they're going to see things as, oh, I can't make a mistake. I'm going to try to cover something up. I'm not going to tell things when an issue surfaces. So I think that's being upfront, communicating, and facing these issues head on is essential too. And that's just one part of culture, which is one part of leadership. Okay?
Absolutely. And it's funny that you say that, when I was younger, I'm still young, but when I was younger, when I first started, doing landscaping for my grandparents' house, my mother was like, "All right, you go on ahead." My grandmother would look at her and go, "Is that safe?" She's like, let him learn. I mean, he's going to have to learn and grow from his mistakes. And I did. I made some really stupid mistakes, but those are the greatest lessons I could have learned. It's like learning from your mistakes, learning from your pitfalls. And that's the biggest thing where it's not like, I'm not going to get punished for it. It's like, oh, okay. And she would come up over to me and she's like, did you learn your lesson? I'm like, yeah, I did. Like, it was just, it was clear as day. And I love how you were talking about leadership in the way that corporate America does not do it, because you're right, there's the incentive, like, what keeps them motivated, how do you see them as a person, because it's exactly what you were saying is, when it comes to leadership, see them as a person and actually work with them, let them, stumble a little bit, grow their wings a little bit, but also train people. I mean, train them as people, not just as another number in a spreadsheet. I've seen it firsthand with the companies my mother's worked with. It's like the lack of leadership is appalling. And that's what actually makes people leave. It's not the fact of money. It's the fact of, well, sometimes it is money, but the main factor is how are they being seen? How are the employees being seen? Thank God that, you see that and you go, well, this is the leadership that has to be, put forward. It's like, what's the motivating cause? How do we keep them motivated? How do we teach them, educate them, and just keep this business running like a well-oiled machine? It's the employees that make the business. And you're right. You have to eventually figure out, okay, I'm not going to be running this business forever. I got to give it to somebody. That was actually a very hard thing that I had to learn, to go, I can't be chief cook and bottle washer all the time. I can't be the CFO, COO, everything else and the employee at the same time. Just didn't make sense. So it's like, well, how do I train somebody? How do I train somebody to be me? And that's the biggest thing. But anyway, amazing points there. But with kind of segueing more into the nerdy aspect of this podcast, economics. There's a lot that's been happening right now between central banks, precious metals, real estate. And I know people are out there going, where do I put my money? But let's rewind all the way back for a minute. How does somebody actually understand, their investment? How do they figure out a balanced portfolio? So let's start with that, and then we'll go into the headlines. How do people read the news? Like, what are the factors that people should be watching to protect their investments?
Great question. I like that. I think, I studied finance and economics a long time in my life, academically, and then, at my jobs. You start out with all modeling, financial modeling, econometrics, all this quantitative stuff. Distilling it down, right? Economics is the most exact of the human sciences. Okay, so it's a human science, and that means that, if I were to boil it down, it's incentives. Economics is the study of incentives. Okay, so you want to understand how something works, how an industry works, how a market works. Study the incentives. Okay, and it's not, because you can put regulation, you could put rules on something, but the economic incentive is the most powerful factor to drive a behavior. Okay, behaviors follow incentives. So when you're reading any news, any article, any coverage, any data points, I think number one is, why is that behavior happening? Okay, number one. But a bigger point is like what to pay attention to. There's a couple of things. Okay, one is, we all have to pay attention. Every citizen, every person should know, okay, what's going on with the Fed rate? Okay, what's going on there? How, in general, what's the equity markets behaving? Okay, because those are indicators that tell us how the economy is performing. So jobs market is another big one, right? And all these things, oh, I don't like talking about it. I don't like talking about politics. It's not my cup of tea, whatever. But it affects your life, okay? Because you will
That's
pay
true.
more. You will pay more on your groceries. You'll pay more at the gas station. So you have to at least know what's going on, so you're not caught blindsided. Okay. So that's a big item that I want to put out here is, always pay attention. The jobs market, what's going on? The federal funds rate, what's going on? The equity markets, right? Just pay attention. What is going on there? And it's not like, oh, okay, maybe you're not a specialist, but it is interesting stuff, because there's always something happening, right? There's always a
Oh,
new technology being built. There's always something in that sense. When we think about This is going to give us the layer. Okay, if there's more jobs, it's a sign that the economy is doing better. If the stock market is going up, initially it's a sign that the economy is doing better. More wealth will be spread around. However, of course, you got to drill down and understand: is it only a handful of companies, or is it a broader sentiment? Right. So I think these things are essential for everybody to understand, just to know in what context, like it or not, you're inserted into this reality. Okay, so going back to incentives, okay, federal fund rate, right? What happens? The rate goes up. They're trying to reprimand consumption, right? So they're trying to stimulate savings. That's the incentive right there. If rates go down, they're trying to pump more activity into the economy. That's the logic behind incentives, right? So again, anything that you want to understand the behavior, I would look for the incentives, and for context where we are today, those are some factors that I think everybody should pay attention to.
Wow. And the way that you broke it down, how these rates work, it's very interesting. When you start to look at these different cogs in this massive wheel of the economy, that's when you start to see, okay, this makes sense. And you have the people out there that go, well, I'll just do this, it doesn't really affect me much. Well, in fact, it does. It's like, when you go to the store, it's a part of it. Like your local grocery store, it's effective. The gas pump is affected. Your salary or bonus is affected. And it's all these little things that we don't really pay attention to that are the biggest things we should pay attention to. So I really love how you broke that down. But I guess moving on to my next point, from going from 2026 into 2027, for the US market, what does the economy look like? What is because you're boots on the ground, you're in the trenches when it comes to the investment world, and, looking at all these projections and all these, I guess, finance projections, I guess is the best word I could use. What are you seeing with, or at least projecting with, the interest rates? Of course, these are just projections, ladies and gentlemen, so there's no guarantee. But with these, what you're seeing, is the economy going to ease up? Is it still going to have a little bit of sniffles? Like, what are we looking going into 2027?
Complicated question, Michael, but good. I love these kinds of zingers, right? So, again, just disclosure, not financial advice. This is my personal opinion. I feel that this year we're coming off of a very hot spring in terms of the equity market, right? Things started to cool down. Today's Tuesday, as of yesterday and today. I think we're going to have, for the remainder of the year, we don't expect a rate cut. Okay, even if you look at prediction markets, we don't expect a big rate cut for the remainder of 2026. Those percentages do increase a little bit by the end of 2027. Okay, so my sentiment is that, and even politically, this year is should maintain the equity markets at a high. So I think that this year we're going to see a forceful incentive for the equity markets to be rising, okay, or maintain their performance. I do feel like over the next 12 to 24 months, we will see repricing or rebalancing, okay, and this is because of fiscal incentives and monetary incentives that I honestly see as over or massive printing of money, and not as much fiscal stimulus as we would need for the real economy. Okay, I think the fiscal spending is going into the hands of fewer assets or fewer users. So I feel like we're going to see some economic turmoil over the next 12 to 24 months. But that's a rebalance. We've come across, I don't know how many record highs on the equity market. So we've had a long run. This is more than overdue for us to have this slight correction. And the U.S. economy is diversified, strong pillars. So we will see this shakeout and things resurfacing into a stronger outcome. I think after that, I think we're shaking out the weeds, but I do see a little dip and something coming back over after those 12 to 24 months.
Absolutely. And I'm seeing the same thing too. I'm knee deep in the real estate industry. And I think a lot of people forget that the markets do have cycles. I mean, they're not going to be perfect forever. I mean, every 3 to 5 years, mainly the 5-year mark, markets change. I mean, rewind 5 years ago, the interest rates were so low. And now you have all these loans that are coming due and the interest rates are going up. I mean, it's just so many perfect storms that are happening with investments. And everyone's like, oh, no, survive to 25 or survive to 26, whatever it is. And, that's just, unfortunately, that's just the way the market is. You have to understand that, there's cycles in the markets, an actual living, breathing thing that we kind of have to manage and kind of go along with. You could change your property, you could change your portfolio, but you can't change the market. You kind of have to study and go, okay, where are you going? Like, that's kind of at least my take on it. But for these market changes, I mean, everyone's like going, what do I do with my money? Like, for example, I'm very heavily invested in real estate, but of course, I don't want my eggs in one basket, because if the real estate market takes a dip, I don't want to go down with it. I've heard that, gold and silver are very good for preserving your wealth and, kind of beating against the erosion of the dollar, for example. But on your end, on the investment side, what could people look for to kind of, either balance their portfolio out, or two, at least stay ahead of, market uncertainty, whether it be, Fed chair uncertainty, central banks going wonky, or the erosion of the dollar? I know it's a very big question, but what kind of things, like, for example, real estate, can people invest in to kind of stay ahead and also stay a little bit more secure than they were, let's say, 2 or 3 years ago?
I just want to, before I answer that, I want to draw one parallel, Michael, which is when we talk about how much or is something worth, or what is a good asset or a good investment, the answer usually is depends, right? Because it's like, well,
Yeah,
how much, what's a good real estate? What's a good house or multifamily home? Oh, it depends where it's
depends on
located,
the market and
what
the fundamentals. Yeah,
fundamentals, right? So I that framework is for everything, right? It depends on the price that's being offered for what is being offered, right? So you have to always take into consideration what to buy quality assets at a fair price. Okay, so this framework works for stocks, it works for real estate as well. Okay, I want to pay a price that allows for me to have returns on this investment, considering this as a cash generating asset, right? If you pay, oh, you bought a real estate investment, but it pays you 0.001% a month, you're never going to see that payback, right? Same
yeah,
thing. Same thing with equities. You want to buy into an equity that has high potential for appreciation, right? Versus the price that you're paying, or that already has a stable market and generates good cash flows, again, versus the price that you're paying. Okay, so I just want to take that framework, which is how much is something worth. It always depends on how much what you're getting for versus what you're paying. That framework always to carry into buying and anything at all. Second is what to do with the money. That's a broad question, yes, but when we talk about financial planning, investing is one part of it. Okay, and it's probably the last part of it. We have to start with, okay, my income is lower than my out, my expenses for a certain period. Okay, cool. Then I'm in good standing. I have credit card debt. Okay, let's work towards getting rid of that. Do I have enough for 3 to 6 months? A kitty if something goes wrong, if I lose my job, if I lose my company flounders or whatever. Yeah, okay. Then we can start. Once you have your emergency fund, then you can start investing. Okay, and then within that framework of investing, that's in the umbrella of personal finance, financial planning. We have a couple of things. One is, what are your goals? Okay, so if you're
very important.
65, yeah, that's where you start, right? If you're 65 and you say, oh, okay, I need this money to plan out the rest of my retirement, you're not going to go into, venture capital or putting your money into risky
No.
assets, right? You're going to buckle down and have a higher percentage into fixed income or bonds, things like that. If you're young, right, and you say, okay, I can withstand the next 4 years of volatility because I'm not going to use this money now. I'm going to use it in 40
Yeah, your
years.
risk tolerance is higher.
Your risk tolerance is higher. Exactly. So that's one. I just want to align on these concepts because oh, where do I invest, dude? If you have credit card debt, don't invest. You got to pay that off first, right?
Oh,
But
yeah, 100%.
let's assume that, okay, no credit card debt, you're good standing with your mortgage, with the car loans, et cetera, no student loans. Okay, you're in that part of I have investing. What do I do with this? I think a big part is, what benchmark do we want to surpass, right? What is that benchmark? Is it inflation? Is it the regular stock market? But am I willing to take on the same risk as the stock market? Because here's the point. I personally see that, yes, we have overprinting of dollars. So what that means is, in real estate, tell me how much the these real estate assets were worth 10 years ago, how much they're worth today nominally, right? It's absurd, right? We
Yep.
got a whole generation after the boomers that can't buy a home, and they're all work harder, yeah, but guess what? Their parents and grandparents got at a fraction of the price than it was today, right? So
Right.
my point is same thing with equities. Okay, you can very easily see something that, oh, the stock is going up massively, yeah, but guess what? It's not because of the quality of that asset. It's because of inflation. It's because of the overprinting of money. We have to be very careful to look into quality assets. Okay, now if you're just thinking in a broad spectrum, okay, maybe a broad exposure to the S&P is not ideal, and you can migrate into physical assets. Okay, that have the property of storage of value. For example, real estate at the adequate price. We can talk about gold, physical gold, right? Because if you're talking just an index, that really doesn't say anything. It has to be guaranteed by the physical piece. Same thing with silver. Now, me personally here, guys, please don't go into and buy Legos as a collector's item, or watch, because I've seen a lot of people do that. That's not a storage of value. You can get
Oh,
lucky.
God.
I bet you, you can with trading cards, but that should not be your investment strategy. Okay, go. You want to be risk averse. Go into bonds that have a nominal yield. Go into assets with store of value. We can talk about gold. We could even if it's Bitcoin, which Bitcoin and Ethereum that have certain applications, right? It's less than their value doesn't come only from speculation as the other or the majority of the other cryptos do. They do have an application. Um, or if you go into assets, don't take on a broad exposure, but go into stocks and assets that have cash flow producing capabilities. Companies that their products or their services have low demand elasticity, right? So economy up or economy down, you're still going to consume gasoline. You're still going to have consumption of consumer staples, right? Things
Yeah,
like that.
necessities.
Necessities. You're going to buy less high-end cars, but you're going to continue to buy groceries, right?
Yeah,
So
groceries, gas, rent, stuff like that. Yeah.
that's it. So take your exposure out of assets that depend on the market being high, right? We call that the beta, which is their correlation to the market, and put it into something that you see that has a higher store of value, at least for this period, right? That when you're being bullish. My view of the bullish outcome is the next 12 to 24. Maybe you have a different view, but while you have that view, put your assets into something that has a store of value, okay? And don't no collectibles, and don't put your money under your mattress, because that's how inflation beats you.
Yep. Absolutely. And everything that you just said there is exactly my investment philosophy as well. It's like, um, I preach real estate all the time, but I also preach smart investing. Like, how can your money make money for you? And that's the point. It's, how do you have your money make money for you? But then how do you preserve that wealth? How do you preserve the cash flow? Like, for example, okay, when I have all this cash flow coming in, what do? I invested in, precious metals or hard assets like gold or silver or whatever can preserve my wealth. That's basically how I go about it. But I would love to dive more into that. We might have to do a part two. But Robert, if there is somebody out there that wants to get into finances and economics and they want to learn about it, but they have no idea where to begin, what would be some words of advice you would give out to the audience to say, if you want to start with economics and finance, start here and then progress, so on and so forth?
Um, Couple comments. One is everything that you need to know, the technical terms, they're all available on the internet. Okay, so you don't have to go. You don't have to do a master's degree. You don't have to go to a specific college. You can find everything online. Today, you can find everything online. That said, I do recommend taking a structured approach. Okay, because that's the best way you learn is if you get a version where you know what to study, you know what to look at, right? Today we have the opposite problem. We have too much information out there. The second part, and this is crucial too. I know it sucks. I know it's boring. Economics, finance start with accounting. Okay. If you don't know accounting, you can't progress. Okay. So you have to know, and I'm not talking about, oh, you have to become a CPA, but the basic rules and everything, you have to know how that works. Okay. So that would be a good starting point. Um, Third would be professionally the college and MBAs and the CFA charter holder, they open a lot of doors. They teach you, you get the structured consumption there, but there's no replacement for the work to be done in this field. Okay, so I would recommend get your feet wet. Okay, as soon as possible. Go study. Go, figure things out. Dab in the markets. Do paper trading to understand investments. If you wanna, again, going back to the accounting, all these publicly listed companies, they have to publish their financials quarterly. So go inside and see, okay, what are they talking about? What are the adjustments? What are they mentioning here? I think that's the best exercise. There's no classroom that can replace that. So get your feet wet, study accounting, and everything's available on the internet. So trust in yourself and just jump in.
Amen. And I always say YouTube University and just the internet could be your greatest college. So I love that you brought that up. Last question. Where can people find you and follow you to see what you're up to and what, you're seeing out there in the investment world?
Absolutely. I like building bridges, Michael. So this isn't just for you. This is for your audience, anybody out there. I'm always available, always happy to connect. LinkedIn. Okay, that's my full name, Robert Checchia. My email is robert@benzinga.com. Feel free to reach out to me. Again, I like building bridges. So you want to talk about, okay, hey, I'm a 20-year-old. This is what I want to do for my career. Okay, we can talk about that. Hey, I have a portfolio. I'm thinking about this, this, and this. Or corporate finance. I have these, or accounting questions. We could talk about that too. So everyone, please always feel free to reach out to me. My door is always open. I like having these conversations.
Ladies and gentlemen, you heard it. That is an open door to build a wonderful relationship with Robert. If you want to learn more about his company and also his social media, please check the episode description below. You can follow him on LinkedIn, and also his website as well will be provided there included, so you can reach out to him at any given time. But anyways, to my audience out there, build yourself better and bigger every day. Live better, live bigger, always moving forward. And Robert, thank you so much for coming on and sharing your wisdom, my friend. I got a ton of value, and I know my audience is going to get a ton. For all I know, we just probably made a bunch of accountants today, so who knows? But thank you so much for sharing, my friend. This was great.
Thank you. Thank you. It's an honor and a pleasure again, Michael. Appreciate the opportunity. And again, my door is always open. Thank you again for the opportunity.
Of course.